Have you ever wondered why two traders look at the same market and come to completely different conclusions? One says buy, the other one says sell. And the scary part to it is both of them might just be wrong. Today, I'll break down technical versus fundamental forecasting. And most importantly, I am going to talk about how smart traders get to use the both of them to their advantage. The thing most people fail to realize is the fact that both technical analysis and fundamental analysis are both trying to answer just the same thing or the same question, which is where is the price going next? But they approach this problem from two completely different directions. And this is where people get it all mixed up. The fundamentalist studies the cause of price movement, while the technician study the effect of that particular price movement. One looks at why price should move, while the other looks at how and when the price should actually move. So let's start with fundamental forecasting. Fundamental analysis examines all the forces of supply and demand that actually push the price to go either higher, lower, or even sideways. And this includes economic data like inflation, GDP, interest rates, tariff hike, recession, or whatever I might call it, or even companies' data like balance sheets, their revenue, their profits, their earnings. In terms of news and global events, we talk about things like rate hikes, we talk about wars, we talk about earnings, and relationships between this country and another country. Also, I would say fundamental analysis gives broader insight into market sentiment and macroeconomic activity. In simple terms, fundamental analysis helps you understand the real value of an asset. So the question you might be asking right now is, who then is fundamental analysis best for? I would say fundamental analysis is good for you if you are a long-term investor, position and swing trader, and if you are a stock, forex, crypto, indices trader. The big advantages of fundamental analysis are based on the fact that it explains why price should move. It helps you make right investment decisions and avoid overvalued assets. What I mean by that is, for an example, you are willing or planning to buy gold and there is a war escalating in a particular country that have a very high value, or let's say a high volume of gold in their reserve. By that time, if you are looking to purchase gold, you should know you are in for some real action. You must know when to get into the market, and you could actually not do that only if you are good with your fundamental analysis. But here's the problem: fundamental analysis has serious limitations. Your signals are often too slow. Timing precise entries for trade is actually very difficult using fundamental analysis. And in most cases, the news is already taking effect in the market. By the time you are seeing the news, it has already taken effect in the market. So you're actually kind of not too but quite late to make the trade if you're actually trying to swing trade. So what I'm trying to say is fundamental can tell you what to buy, but often fail to tell you when to buy, what to buy. So apparently, if you know what to buy but you don't know when to buy it for proper profit, that actually doesn't really make much sense, right? And that is where technical analysis comes in. So if you are enjoying this breakdown of the technical and fundamental analysis ideas so far, and you want more trading educational content like this, I would advise you subscribe to this channel, because that actually keeps this channel growing and lets me know that I am actually doing a great job. Apart from that, it gets to help YouTube to recommend this video for better audiences that are actually interested in this kind of content. So don't be selfish, please do that. So in the place where fundamental can actually tell you what to buy but you don't know when to buy it, this is where technical analysis comes in. Technical analysis focuses on when and how price will move, helping you to gain proper entry into that market. Instead of news, technical analysis uses price and chart patterns, talking about your support, your resistance, and trend line. Technical analysis focuses on price action and volume, market structure, and liquidity. Now, I believe you are beginning to see the differences between both technical analysis and fundamental analysis. All this is possible because technical forecasting focuses on just one golden principle, and that is the fact that price action discounts everything. Or let me put it in simpler terms, in the way that price action reflects everything that is going on in the market. Much as technical analysis is advisable for almost all traders to learn, understand, and know how to use, I would say it is best suited for you if you are a short-term trader or you are looking for proper and precise entries into price or market to take out your liquidity or profit. Technical analysis is what you would use to know when to enter the trade, while your fundamental analysis will tell you what to actually trade. But technical analysis is not perfect either. It has its own advantages and it also has its own disadvantages. The advantages of technical analysis are the fact that it gives us clear entry and exit points in the market. It works in any market and it helps in fast decision making. Unlike fundamental analysis, the fundamental analysis you need to understand and properly harness for forex is different from the one you need to harness for crypto. It's different from even the tools you use when you're trying to understand the fundamental analysis of option trading. But technical analysis is very, very much universal. For the disadvantages of technical analysis, I would say it ignores fundamentals. It also gives false signals in low liquidity markets, and overloading indicators can actually lead to confusion. Technical analysis gives you timing, but trading without fundamentals is actually like you trading without context. So which one is better, technical analysis or fundamental? I'd love to hear your thoughts in the comment section before I say mine. The thing there is, I've noticed that most traders like to, identify themselves like, oh, I'm a technical trader or I'm a fundamentalist. But in reality, smart traders learn to combine the both of them to take advantage of the market. That particular mindset of being a fundamentalist or a technical analyst is very, 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 very limiting. As a smart trader, you must learn how to combine the both of them to your own advantage, because at the end of it, what matters most is your win rate against your losses in the market. So let me give you a very simple framework that you can work with whenever you're trying to create the balance between you being a fundamentalist or a technical analyst, or even beyond that, you trying to make a proper trade in the market. Just know this at the back of your mind. Fundamentals let you know what to buy. Fundamentals decide what to trade, while technical analysis decides for you when to make that particular trade. Let me give you an example. Let's say Bitcoin has bullish fundamentals. You are going to wait for technical pullback, which we refer to as retracement. You enter a confirmation and you manage your risk. And you see, my dear, following this basic principle is not gambling. That is you professionally trading as a professional trader. By you applying both fundamental and technical just to take out a simple trade, you have a fundamental analysis or a prediction of Bitcoin going bullish. You use your technical to confirm your entry and you manage your risk. You see, that in particular is the very framework that smart traders live by. They use fundamentals to define buyers, they use technical analysis for entries and exits, and they use risk management to stay in the game. Being a professional trader is not you falling to one side or the other. It's you understanding that survival is the real hedge in this market, combining both of them and with your asset management skill. If this video helped you to see the market more clearly, I advise you like this video, you subscribe and share to others so they can get to see what you are getting from this channel. So when next time come your way, stay cool and play big.